All right, another quick update here, looking at two names, and first one up, SoFi Technologies, symbol SOFI, listed here on the NASDAQ. This is a fintech firm, right, online bank and whatnot, and people were beating them up, of course, back here. Again, quick recap, down here at $6 a share, hitting new lows, saying don't touch it. It's all about student loans, and they're not paying student loans back, but of course, on this channel, I said I'd be buying like an animal. Kaboom, we go from 52-week lows of 6 to 52-week highs of 17.19, and have since kind of been in this downward consolidation channel. We can see the last couple of days we had nice run-ups, almost formed what looks like a bullish hammer, technically getting up and closing above this 20-day moving average here. You can see last time it happened, though, we essentially opened almost right near that top and then pulled back to test and then dropped below the moving average. So in my opinion, we may have kind of topped out here. We're looking at this top line resistance going from the highs December 18, 24 connecting to December 26, 24 connecting to, incidentally, the high that we saw today. And we can see on the bottom end here the low on December 6, 24 connecting to the low on January 2nd, 25. So kaboom, we're in this downward consolidation channel. Earnings coming out essentially in the middle of this entire pattern, looking like January 27th, expecting EPS of 3.4 cents a share off of revenue of a touch below 675 million. Quick recap, last quarter the company brings in over 689 million off estimates of 631 million, beating by over 9%. Nice, healthy, profitable EPS report as well. So, in my opinion, technically, in the technicals, the stock really should reject now and come back down. And, we can kind of come back down slowly over the next couple of days to the bottom of this range, potentially, looking like the high 12s. And if we didn't have the earnings, you can see if we come back down into this channel, and of course we have the support trend line up here as well. And if we came down here like perfectly where they intersect, you can see it's about 12 and a third, right? But we have earnings coming out. So this is why we could have a rejection for a couple of days. You could potentially see 13, and then you really should technically have a bounce back up to 14 plus going into the earnings. And then if they beat, you're going to potentially see another breakout of this downward channel, which technically should drive the stock up to the high 17s, low 18s, maybe even higher, and should technically bring in new 52-week highs. Because again, the whole time here, they were technically beating earnings more times than not as interest rates were up. And now as we're seeing interest rates cut, and we know that that's going to be probably a main priority of President Trump coming in again, inauguration on MLK Day on the 20th. So I'm very curious to see how the market's going to react that Tuesday, Wednesday, Thursday after he actually is inaugurated. Because right now, anything can happen. We still see that. But I did want to point out this support trend line as well. I don't think we're going to approach it unless, we have some big red days. Anything can happen. But if we did hypothetically just drop in the next couple of days, you can see you're looking at like 1160, 1170, 80, that range, right? So that's probably worst case scenario, maybe back to that 12, sub 12 range. But I said that as we break out and as the stock's going to hit 12, 14, 15, that's when people are going to start talking about it on YouTube. Everyone's going to consider jumping on board. And I did speculate that also, not only was it a good play here, but I said that over the long term, when Trump hopefully wins the election and gets in, he's going to start to bring rates down, and that's only going to help SoFi even more, right? Because supposedly that was the narrative as to why they kept it down here at new lows. So this is why I'm saying, in my opinion, probably going to continue up, but if it goes down first, obviously, it happens. But stock closed almost at 15 and a half, even up a full point today. Nice 7% bounce. And again, we were dropping here, 3 red candles, almost to the bottom of the range. Boom, we bottomed out and popped up 3 green candles. But again, technically, we should start to reverse down. So keep an eye on that trend line. And if you do see the rejection coming down, just like you saw here, then if you want, again, up to you, your own prerogative. But if you want, you can maybe trade in and out a couple of SoFi puts on that one. But market cap 17 billion. Again, now we're up to 700 million a quarter. So we're bringing in, 2.6 billion for the year. So we're trading, about like 7x annual revenue. We have a high PE, 122, but again, we've seen other companies get pumped off of whatever, space, rockets, ASTS with the telecom nonsense or whatever. And technically, a lot of these companies weren't really established. They don't have the positive track record that SoFi has. They're not growing at the rate SoFi has. I posted my previous update where was back on November 11th, I believe, and I did updates talking about SOFI, Honest, and DraftKings, and those were three stocks. That was the video. It was three stock update, and in the thumbnail I said three stocks that deserve to pop recently based on growing business numbers, and that's what I spoke about in the last update regarding SoFi, Honest, and DraftKings. But again, I made sure to put SoFi in that video that was back here, November 11th, here off of this pop with the stock getting up to 14. And in that video, I said, if other companies like the ASTSs and the meme stocks are worth, $7 billion in change, then something like SoFi that actually has a proven track record and is growing, the stock was at 14. I said, in my opinion, you could bring this up to 34 and nobody would say anything. And now all of a sudden I'm seeing reports who's upping price targets to the 20s. Here again, you see, what was that, Citi? Look, now all of a sudden it's a winner, right? See what I mean? This is why I said about how the headlines and the news cycles flip and hop the fence after it's already too late. Which is why when we have a growing company that quiets down, we utilize the Buffett method, and that's when we begin to accumulate shares, build a position, and then we wait for that rebound, we wait for that breakout. Initiated at outperform, right? So William Blair just started looking at the company, initiates coverage at outperform. And again, this is over the last couple of days, right? Up here in the low mid-teens. So that's why, again, I think, in my opinion, we're looking for 20 plus. I mean, conservatively, of course, I could say, $20 a share, 21 and a half, $24 a share. Realistically, honestly, I think we double from here. I think we see 30 plus. Especially if you can give it some time, right? The more time you give it, the better it's going to be, especially since the company continues growing nicely. SoFi maintain at buy at Citi. Price target raised from 12.5 to 18. 50% raise in price target. That's why I'm saying, again, we might quiet down, channel down for a little bit here, earnings, kaboom. So we'll see. Hopefully they could deliver for you guys again, because, of course, unfortunately, everyone missed this and bought here, and now they're hoping for this. So, of course, I'm pulling for you guys, even though, you're technically like 100% late to the party. But I'm pulling for you. Anything else? Anything else? Downgrade? Okay, whatever. What'd they say? Underperform from market perform? No way. No way. Not with rates coming back down. Right? Not with the stronger dollar, in my opinion. How? How can you say it's going to underperform the market? Especially in my opinion, if we're speculating, again, I know it's a prediction, but if we're speculating that like the first year or so of the Trump administration may be like a downward consolidation, quiet year, to where we may actually have a red year, even though we may be getting economic updates of improvement here in the States. Brokerage raised the price target on the stock to 8 from 7. What? I have no idea what these people are smoking, but I don't know. I might need some of that. Path ahead is long and difficult. I have no idea what they're talking about. Saying the valuation was too high. Okay. Yeah. Ask him about Palantir. Ask him about Palantir. See if the evaluation's too high, right? That's what I'm saying. They come out, they make these statements, they release these reports, and this is why I'm saying, see, somebody like that, in my opinion, I'd fire him. I'm going off on a tangent here. We're going off on a rant, but I mean, it is just laughable. It really is just laughable. Come out, tell me something like ASTS, Rocket Lab. Come out, tell me something like a Palantir is overvalued. Tell me something like Robinhood is overvalued, right? That's what I mean. I would understand it. But no, you come out, you say SoFi has too high of a valuation, and the fintech will struggle to meet its financial guidance. Well, that remains to be seen. How can you make such a prediction like that, especially against a company that's been growing 20, 30% year over year, quarter over quarter? Are you kidding me? Reading. crazy. After the election indicates the valuation is overstretched, quote, across a wide matrix of multiples. Well, SoFi has offered long-term forecasts in the range 55 to 80 cents. Reaching that 2026 target will require, quote, a significant pickup in revenue with strong operating leverage. He characterized the path as long and difficult. Right, but again, when we did the update back on November 11th, we were looking at previous earnings and what the company was saying, and the numbers were growing, again, 20, 30%, quarter over quarter, year over year. This company's been on fire. So to come out, I don't know, again, in my opinion, I'm not seeing it. I'm seeing the opposite. Analysts pointed to management's long-term target between 20 and 30%. Quote, only a handful of chartered banks can manage to sustainably generate returns even in the 20% range. So that's the argument. That's the argument. They're one of the smaller players. And, oh, you know, a JP Morgan or a Goldman could see 20 to 30%, but SoFi can't. What a silly argument. Even if SoFi generates a return of equity of more than 20%, which is likely, quote, likely unachievable until 2028 at the earliest, the firm projects 46% downside for shareholders, meaning the stock could lose nearly half its value if market conditions trigger a drop in price. Okay. Which, of course, at the rate at which SoFi is growing, in my opinion, we would need some serious internal financial situations to be taking place in the banking and fintech sector, which, in my opinion, would mean that the larger players like your Morgans and your Goldmans, those institutions would technically be more exposed than the little guys, based off of what history has shown me. But that's just my opinion. Maybe I'm interpreting it incorrectly. Would love to hear your thoughts. Yep, focus on student loan refinancing options. Right, that's why they beat the stock up. Hey, listen, Amazon started out selling textbooks to college students. Now they sell everything, and they're able to sell it at a lower price, but no one has an issue with that. Company has expanded over to include home loans. Yep. Had an undeniably good year. Overshadowing PayPal, Affirm, Block. So man, the stock is too expensive, right? But again, something like Palantir isn't too expensive. Something like Nvidia isn't too expensive, right? Again, that company doing tens of billions of dollars in revenue with the $3.5 trillion valuation or whatever the heck it is right now. I mean, let's be serious. $12 a share, B of A, that person would be fired. As you're watching the stock break out, you're saying there's going to be issues and you're lowering price targets. Laughable. Laughable. Oh, we're not giving... There we go. I'm reading. 20 fintech companies expected to grow rapidly through 2026. Maintained underweight by Morgan Stanley. This was December 19th. Underweight raises price target from 7.5 to 13. Crazy. Honestly, again, in my opinion, you know what this means? I'm going to tell you exactly what this means. They don't look at the smaller players. They were keeping an eye on their 10 years, their 20 years. They're tracking the DXI like your boy does here. And they decided that if they wanted to take a financial or a fintech position in the sector, they would most likely just continue to ride the wave of a larger financial institution. They missed the bottoms. They missed the buy signals and ranges between $6, $8, $10 a share. They missed the run. Now the stock's up here at the mid to high teens, breaking out into potentially uncharted waters, hitting new 52-week highs consistently, dropping down into, in my opinion, a bullish technical pattern, preparing to break out and rally off of hopefully another earnings beat. But now they're all lowering their ratings, right? Again, even the price target, Morgan Stanley said 13 a share. Stock's at 15. And again, I know this was December 19th, so even if we back it up, look, December 19th. The stock just spiked up to those new highs. and then had a pullback to 15. So that's what I mean. They saw that they missed the move. So now all of a sudden, oh no, it's too high. We got to bring it down. Why? So you could buy it. So you could buy it. Because at the end of the day, just because it's above your personal price target doesn't necessarily mean it's overvalued. There's no guarantee it should or has to pull back to 13s, even though it does look like it will. But again, this is a longer price target outlook, right? So they're looking out for the next 8, 10, 12 months, saying that it should kind of just flatten out and not do much and hang out around 13, 14 a share. That's actually what they're saying. Which, again, based on the performance of the company, in my opinion, they're not going to see that type of move. And this is why, again, I think all of these people are late to the rally. And that's why you're seeing price targets raised up 70, 80, 100% in some cases. But yet at the same time, it's still technically holding water higher than their level. So they're looking at it negatively, almost insisting that the stock has to pull back. We have to kind of tell everyone that they should stay away. Let's let it cool down back here to 12 and change, 13. And then we're probably going to buy it for our clients. And then we're going to have a break up and out. And we're going to look like geniuses. That's why it's just laughable. Just laughable. Again, nobody was playing the breakout. I had a lot of people. Analysts disagreed with me. A lot of people in the comments disagreed with me. We had the massive breakout. We're looking at future potential growth based on the growth of these numbers. Now all of a sudden the stock's too expensive? Laughable. We're reading. Yep, see? Stock doubled over 3 months. Here's why B of A says it's now overvalued. Right. They missed the run-up. Now it's overvalued. You understand? So now it has to come back to fair value or undervalued so that B of A could call their clients and say, oh, we're bullish on SoFi now. Morgan Stanley. I mean, technically, Morgan Stanley, SoFi is pushing them back on their heels, right? Morgan Stanley, technically, obviously, it's not a direct competitor when we're talking about investment banking as well, but SoFi, at the rate they're growing, chances are, in my eyes, it's only a matter of time, right? It's only a matter of time. So why would a JP Morgan or a Citi or somebody else be bearish on? Actually, that's why I respect Citi coming out with the buy rating up in the price target from 12.5 to 18. Massive respect to Citi. Because, of course, even though they're a significantly larger player in the space, they're still technically in the similar same sector, right? And they're coming out, they beefed up the price target. So a big respect to Citigroup right there. Morgan Stanley, B of A, oh, it's overvalued. Yeah, that's because you're probably losing business to them, right? So you can't speak positively on them. You just can't. That's the name of the game. But in my opinion, I still like it. And again, even if it pulls back here, 13, 12 and change, whatever, I don't view it as a big deal as long as you keep an eye on the earnings and they continue to grow and beat estimates more times than not. Since December, we crossed to the downside. We've been dropping in this little consolidation. We have potential curling and climbing back up. That's why I'm saying, again, we technically curled up here off of this weakness, got back to the top of the range, and that's why you might see a pullback again. 13, potentially like 12 and 3/4, 12.60, and then you're going to have the bounce maybe going into those earnings. But technically above the mid-Bollinger Band, and you can see the last time it did that, it immediately rejected. And even before that, it went right to the mid-Bollinger Band and then stopped. So anything can happen here. It looks like even on the technical side, we could potentially make the argument that we break out of this channel and go up to new highs. So that's why it's a very interesting play here. Because we could make the argument for either way. But again, I like to look at the long term. In my eyes, could you make the argument it's overvalued? Of course, the stock just exploded. But again, at the same time, looking at how other stocks are growing, 15 here for something like SoFi isn't too crazy. And if I was to buy here, hypothetically, and then we drop down to 12, like we always say, if we like it at 15, we should love it at 12. But I do think we see a rejection here. Bottom Bollinger Band, 1370, right? If we immediately pull back the next couple of days, we're looking at about 13. RSI on the daily, middle of the road, 54. Weekly RSI a touch below 68. But again, it could be ready to break up and out to 1819. We'll see. Mid Bollinger Band on the weekly, about 12 and a third. Coming down very close to a MACD touch. So again, you have to see if it starts to pull back. If it stays in that channel we laid out, then that may cause the weekly MACD to cross to the downside, which will accelerate the sell-off and obviously help bring it back down to the range here. To the bottom of the range, excuse me. But 1236, and again, we can see hypothetically if we maybe got just like a blah report, nothing too impressive, and the stock continued to stay in this channel, you can see where the support trend line and where the bottom of this channel meets up is about 1236, which is right about the mid Bollinger Band on the weekly. So a couple of levels to keep an eye on, but in my opinion, I like the way they're growing as a business. And now that's what I mean. Everyone missed the boat here. They missed the boat here. Now the stock rages justifiably off of solid growing fundamentals. And now everyone wants to say that it's overvalued. I thought numbers don't matter, right? That's what everyone always tells me. Numbers don't matter. We look at the technicals. In the technicals, it looks bullish. In the numbers, in my opinion, it looks bullish. So why are these analysts coming out saying they're bearish? Because they have to, in my eyes. Let's check the pivot points real quick. I'll let you go. Pivot points here, yeah, we can see high 12s, maybe about 13, and we just last year had some resistance, looks like about 16, so yeah, we're like in between that range. Check daily. We can see we're running up to a pivot point 1572, which is technically above our top level trend line, so I don't even know if we might just immediately reject to the 50-day there and drop back down into the 1480s, the low 14s maybe. So we'll see. We have to play it by ear. Oh, also, I'm sorry. I wanted to just show quickly POWW, Ammo Inc., symbol POWW, again, ammunition company. We can see I was looking at this channel here. I said, in my opinion, down in the low ones, the stock, you know, in the numbers looks pretty decent. We had a little bit of a rebound back up here to the 130s. We ended up breaking. We dropped below this support trend line to sub $1.95. Then it's been on the up and up lately. And now you can see we're up to 138, had a 4.5% day today. The stock, if we look here, January 7th, top left of the screen, high 140. January 13th, top left of the screen, 140. Today, 140. So we've triple topped. And of course, triple top could also be viewed as like a double top. So we could maybe pull back and retest this moving average here of about 120. But in my opinion, we could potentially be setting up an ascending triangle and preparing a breakout inside of the next day, 2-3 days, to where we break back up and get back inside the mid-range that we were initially in back here in August, September, bringing the stock potentially back up to about 1.5, maybe 160 top range. So definitely something to keep an eye on. POW, any of you who jumped in here when we looked at it, when we said $1, you know, might be a decent price. Whoops, $1 might be a decent price. Obviously, you saw some run-ups, and then you dropped, you know, 5-10% in change. So if anyone weathered the storm, or if anyone added to their position, and now you're catching this rebound, congratulations. Let it be known in the comments section, right? Brag a little bit. But yeah, we had the late filing, and of course the earnings have kind of been up in the air. But in the numbers, I believe, fundamentally, I think I was saying that I personally value the stock above like $2 a share. So that's why if we start running up now with Trump actually getting sworn in and we come back up to some of these trend lines here, 170, you know, 182, I personally wouldn't be shocked. And hopefully the company can start to deliver better than expected earnings results. Ran up, you can see, look, we topped out almost exactly at that 70 benchmark on 2 occasions and had slight dips down, which is why I'm saying it does look like it's tightening and topping out here multiple times. It looks like, in my eyes, it's preparing for a pop-up. But, of course, if you're thinking differently, let me know in the comments section. But daily RSI 66. Next pivot point, technically 142. So if it does pop up above that 140 triple top, that'll be the first place it goes, technically, should be 142. MACD's been on the up and up. Essentially, look, you know, we were beating it up throughout most of 24, and then as we get into 25, look at the the momentum that the stock has gained just over the last couple of weeks. So this may be a rebound play. And again, like I said, trend lines 160, 170. You can see 200-day moving average on the daily, 170. So it might be fighting to get back there. RSI on the weekly, middle of the road, 49. Still have room to grow over the long term, several weeks. You can see we paused essentially right here at that 140 mark, which was looking like a pivot point of 2024. God, this is annoying. And you can also see that technically MACD's on the up and up. Next pivot point on the weekly, what do you know? 170. With the 50-day basically sitting at 180 probably by the time it gets there, right? Or 178. So that's why, in my opinion, I think we're going to see a little bit of a run up. But again, technically, we may run into resistance. You can see as if you drew that trend line out from those tops there in looks like August of 22 down to October, right? If you like draw that trend line down, you can see it'd be like right there. So that's why you could maybe have a little resurgence back into the 180s, maybe even close to 2, and then it might calm down and flatten out, wait for those earnings. Next earnings release looking like the middle second half of February. Company right now estimating 3 cents a share on revenue of 36.6 million for the quarter. But yeah, POW was one that was pretty interesting. And again, I know that they need the numbers to come in, so it's not guaranteed. Of course, nothing is. Even if it looks better than POW, something may not be guaranteed. But, you know, just an interesting little pattern, something I saw on the technicals, and I posted it in the Discord. So, you know, we just took a quick look at SoFi, so I figured why not look at the technicals real quick in POW and throw my 2 cents into the mix. But yeah, 2 names we looked at. And again, if you have any input or agree, disagree with anything I said, let us know down in the comments section. But that's pretty much it. I will end it there. So once again, stocks by the numbers. Thanks for your time. If you have any questions, comments, or concerns, drop it down in the comments section. Quick to reply. Thumbs up algorithm, right? We know that helps everything, helps me get more eyes on the channel. But of course, subscribe to the channel. That's the handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, and they are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a good day.